The cocoa market is currently experiencing unprecedented challenges, marked by extreme price volatility and a disconnect between physical market realities and financial market trends. Despite expectations of a surplus in the 2024 to 2025 year, driven by increased production in Côte d'Ivoire and Ghana, as well as growth in alternative sourcing regions, prices remain high and unpredictable. This volatility has far-reaching implications for the entire sector, affecting businesses, customers, and consumers alike, who must navigate the impact of inflation and changing consumer demand. Hershey, a leading player in the industry, is responding to these challenges by focusing on responsible and smart sourcing practices. The company's team is actively exploring various purchasing options to ensure that products remain accessible to consumers at affordable prices. This approach is part of Hershey's broader commitment to building a resilient cocoa supply chain, which involves driving efficiency, resiliency, and sustainability. A key concern for Hershey is the dysfunctional nature of cocoa exchanges, which are struggling with liquidity issues. This has led to a troubling disconnect between cocoa bean prices in origin countries and prices on the exchange, making it challenging for buyers and sellers to achieve price transparency and manage risk effectively. Hershey believes that action is needed to address this issue and improve the functioning of the exchange. To build a resilient supply chain, Hershey is investing in sustainable cocoa practices through its Cocoa for Good initiative. This includes a multi-year $500 million investment, with over half already committed, as well as an additional $40 million commitment to improving farmer livelihoods through the Hershey Income Accelerator program. The company recognizes the importance of successful farmers and businesses working together to drive sustainability and ensure the long-term viability of the cocoa supply chain. Ultimately, Hershey believes that collaboration is key to navigating the challenges facing the cocoa market. This requires a holistic approach that involves working with governments, companies, suppliers, and NGOs to foster healthy markets, support farmers, and drive sustainable practices. By working together, Hershey is confident that the industry can build a stronger future for cocoa, from farmer to consumer, and ensure that chocolate remains affordable and accessible for generations to come. Incidentally, Hershey's decline in sales in the previous quarter was primarily attributed to ongoing consumer value-seeking behavior and economic pressure, which led to a 15% year-over-year decline in sales volumes. Elevated cocoa costs and consumer trade-downs also weighed on chocolate demand, particularly in the instant consumable segment. However, Hershey's sweets and salty snacks portfolios showed solid momentum, driven by innovation and targeted investments. The company reported double-digit share gains in the sweets category and steady performance in salty snacks. Looking ahead, Hershey's management expects persistent cost inflation, particularly from cocoa and potential new tariffs, which could create an unmitigated headwind of up to $100 million per quarter in the second half of the year. To mitigate these impacts, the company is lobbying for exemptions, pursuing productivity initiatives, pricing actions, and sourcing changes. New product launches, especially in the Reese's brand, are expected to support category share and drive growth in the second half of the year. As the HSY season approaches, preparations are underway for the launch of a new limited-time candy bar, Hershey Milk Chocolate with Caramel. Designed to pair perfectly with marshmallows and graham crackers, this new bar is a twist on the classic campfire treat. According to Kyle Webster, Senior Associate Brand Manager at Hershey, the combination of milk chocolate with golden caramel transforms the classic Hershey's bar into something extraordinary. The chocolate is available nationally for a limited time in 6-bar packs. With HSY being a staple treat at backyard cookouts and camping trips, Hershey believes its new caramel bar is sure to be a hit with consumers looking to indulge in this classic summer treat. Hershey's drive for innovation and operational efficiency is evident in its significant investments. The company completed a major billion-dollar expansion in chocolate processing, enhancing vertical integration and supply chain flexibility. Investments in its chocolate supply chain are paying off, with a new chocolate processing plant opened last month in Hershey, Pennsylvania, to boost production on Hershey's chocolate, Reese's, and Kit Kat. This investment also aims to provide agility and support innovation across both chocolate and non-chocolate categories. Additionally, Hershey is deploying price pack architecture to offer better perceived value and manage input costs. Key areas to monitor in upcoming quarters include the effectiveness of Hershey's tariff mitigation strategies, the performance of new product launches, and the company's ability to maintain category share and offset volume declines through price pack architecture and reformulation initiatives. Hershey stock has faced significant challenges over the last 2 years, plummeting by more than 40% from its peak. High cocoa prices have been a major contributor to this decline, cutting into the company's sales and revenue. Despite efforts to offer more non-chocolate products, Hershey's candy sales still make up a significant portion of its revenue, and passing on rising cocoa costs to consumers has been a challenge. Yet Hershey has guided for a net sales gain of at least 2% for 2025, indicating that its customer base remains loyal to its products even amid high cocoa prices. Additionally, the top 3 cocoa producers experienced a 20% increase in supply this season, which could provide some relief for Hershey. The company's dividend yield is also attractive, with shareholders earning $5.48 per share in annual dividends and a yield of 3.4%, far above the S&P 500 average. Considering the drop in the stock price over the last 2 years, the company could see a recovery as cocoa shortages continue to abate. The company's ability to afford its dividend payout, which cost almost $1.1 billion in 2024, is also evident in its free cash flow of more than $1.9 billion during the same period. Overall, Hershey stock may be poised for a recovery as the company navigates the challenges of high cocoa prices and investors take advantage of its attractive dividend yield and valuation. In addition to Hershey's demand remains resilient, it continues to invest for the future, including buying new brands to diversify its business. For example, its recent deals to buy Sour Strips and Lesser Evil, expanding its reach in non-chocolate confections and salty snacks. For more on stocks and crypto, follow Ascencore. Thanks for watching and have a nice day.